जानता है तेरा बाप कौन है?
Zomato.
Is it a right time to buy Zomato?
So while it's expensive, yes, but the fact still remains that there is a story, and that is the story you're betting on.
स्विगी जोमेटो में पैसा बनेगा?
These valuations, there is no next Zomato, to be very honest.
From surviving on a shoe-steering budget to dominating the food delivery scene and now making bold moves in new territories, Zomato's journey has been nothing short of a roller coaster. Imagine a startup that went public with just 6 months of runway left, only to see the stock plummet over 60% within a year. But in 2023, something incredible happened. Zomato shares skyrocketed, doubling in value. Hello everyone, I'm Mahima Vaccharajani, and in this video on understanding businesses of the company, let's find out what sparked this dramatic turnaround for Zomato. You might think food delivery is the hero, but there's something else cooking for Zomato. Watch it till the end to find out what's really helping Zomato make those 1,000 crores in a year. Zomato was founded in 2008 by Deepinder Goyal and Pankaj Chadda as Foodie Bay, initially a website for restaurant menus and reviews. It was rebranded in 2010, evolving into a global food delivery discovery and delivery platform. Strategic expansions and acquisitions fueled its growth, making Zomato a leading player in the industry today. From a bold launch to a dramatic expansion, Zomato's journey has been anything but ordinary. They kicked off by rolling out their mobile app, adding online food ordering across India, and acquiring international players like Menu Mania and Lunchtime. This foundation set stage for their 2015 breakthrough, which included buying Urban Spoon and kicking off online food delivery in India. From 2015 to 2016, Zomato's aggressive growth strategy saw the launch of Zomato Gold and expanded food delivery services. Yet, despite this rapid expansion, the heavy investments led to major losses. Determined to broaden their reach, Zomato extended delivery to Tier 2 and Tier 3 cities and introduced Zomato Pro. However, their revenue stood at 388 crores while losses soared to about 78 crores. In a game-changing move, Zomato acquired Uber Eats in India, seizing a 55% share of the food delivery market and stepping up the competition with Swiggy. This acquisition propelled their revenue to 2,485 crore, but also resulted in a staggering loss of 2,142 crore. Despite the impressive revenue jump, Zomato's rapid expansion left them still grappling with significant financial challenges, proving that even giants face tough battles in the face of profitability. Just as Zomato was gaining momentum, the world was hit by a storm, COVID-19. The pandemic not only reshaped daily life but also threw the food delivery industry into a turmoil, and Zomato also faced the consequences. As Zomato battled the first wave of COVID-19 lockdown, a foreign direct investment rule change that prohibited Chinese investors like Ant Financial from backing Indian firms came as a double whammy. The company was staring at a 6-month cash runway, and the IPO seemed like the only option left on the table. The IPO was not some strategic decision. Instead, it was a desperate contingency plan, said the founder himself, Deepinder Goyal, which had to be kicked off amid the worst crisis ever faced by the food delivery major. In a remarkable turnaround, Zomato shifted from struggling with losses to posting a profit of 351 crore in the financial year 2024. This profit grew 22% in the first half of ongoing financial year FY25 to 429 crore. Here's a look at how it accomplished this feat. Firstly, focus on core markets. Zomato realized that only about 20% of cities were bringing in most of their revenues, while around 225 cities were underperforming in terms of orders and cash flow. Running operations in these smaller markets was pretty pricey and didn't make much sense. So they decided to pull out their less profitable spots and focus on the cities that were really thriving and have more growth potential. This move helped them boost service quality and improve the overall customer experience in the key markets. Secondly, increased commissions. Now, to boost revenue, Zomato increased the commission it charges to restaurants from 27% to 33%. This change significantly impacted their earnings, helping them move from a loss of 347 crore to a profit of 2 crore in the first quarter of 2024. The higher commission rate contributed directly to the company's improved financial performance. Now let's come to the big bulls of Zomato that have been driving major growth and profits for the company. Success in quick commerce with Blinkit. When Blinkit, which was previously called Grofers back then, was acquired when it was losing rupees 150 on every order. They were attracting customers by offering discounts but eventually decided to start charging for delivery. Zomato's experience with food delivery came in handy here. A few years ago, they were losing rupees 120 on every order of rupees 300. Even after introducing delivery charges, they kept their demand and customer base strong and actually make a profit of rupees 10 per order. Blinkit will be larger than Zomato. This is something Zomato's CEO Deepinder Goyal has expressed confidence in. Blinkit's revenue reached to 2,301 crore, reflecting a 116% year-on-year growth. Blinkit's revenue in first half of FY25 stands at 2,098 crore. Zomato's use of data for optimal store mapping and efficient delivery logistics has been the key to Blinkit's success. Next, revenue from Hyperpure has been a game changer. Launched by Zomato in 2018, Hyperpure is a game changer for restaurants, cafes, and cloud kitchens handling all their supply needs. It taps into Zomato's big network of suppliers and logistics to simplify the supply chain. Understanding the struggles of managing inventory, finding high-quality ingredients, and maintaining efficiency, Hyperpure brought in a farm-to-fork model that promises next-day delivery of quality ingredients across 10 cities. This move not only solves the problem related to variety, quality, and timing, but also lets restaurants focus what they do best: serve the dishes. Since its launch, Hyperpure has seen its revenue soar from 1,076 crore to 27,784 crore. Hyperpure is strategically important as it strengthens Zomato's relationship with restaurants and enhances the overall ecosystem. If we look at the first half of FY25, its revenue stood at 2,685 crore. All of this turned things around for Zomato. From a forced IPO and a risk by founders to bold buyouts, Zomato has become a success story. In fact, Zomato made another big move by buying Paytm's ticketing and entertainment business for over 2,000 crore. Thus, they've shifted gears from just delivering food to entering the going out sector. But will it be another good buyout? Just like the food delivery, the ticketing space is a kind of duopoly right now in India. Book My Show has a huge chunk of the market, about 75% of movie tickets and over 50% of event tickets. The rest has been with Paytm, as Jeffrey points out. Interestingly, the acquisition comes at a time when Zomato's stock is really taking off. Their shares have been more than doubled this year, thanks to their quick commerce business making a big stride in India. Zomato will replace JSW Steel in the 30-share BSE Sensex effective December 23, 2024. This move follows a strong performance by Zomato, which has seen an impressive 130% return over the past year, outpacing the Sensex's 12-month return of 20%. In 2020, with just 2,605 crore revenue to rupees 12,114 crore in 2024, it has seen a whopping 130% spike. They turned profitable only this year as their net profit stood at rupees 351 crore. With Hyperpure and Blinkit, Zomato is striving to dominate restaurants and plates all across India. But will the newest buyout make it a formidable player? Comment down below if you have stayed invested in Zomato since the start, and stay tuned to NDTV Profit.
Have you ever secretly used Swiggy?
I have never.